In this video today, we're going to be taking another cheeky look at 𝗲𝗓𝗏. We'll be taking a look at see the price action of the one token and to see exactly what is likely to happen in both the short term and the long term. We'll be having a look at the fear and greed index generally, the fear and greed index along with liquidity issues driven from 𝗖𝗢𝗠𝗠𝗘𝗏, and also Bitcoin's dominance, compiling all of these pieces of data together to give us a bit of a flavor as to where things are likely to go. Guys, if you do find this video useful and informative, hit that like button. We both really do appreciate it. And of course, if you happen to be new to the channel and you'd like to stay up to date with all those new cryptocurrencies, hidden gems, technical analysis, and news, then do go ahead and subscribe. By subscribing, you will be kept up to date with absolutely everything we do here. It is free, you'll stay well informed, so tap that bell, hit on all, and you won't miss a single video. Chris, is there anything else that you want to add before we jump on down into the technical data and start reviewing what is going on here with 𝗲𝗓𝗏?
Yeah, just to mention, obviously, we are a validator for 𝗲𝗓𝗏, so you can delegate your 𝗲𝗓𝗏 tokens to the 𝗕𝗘𝗪𝗏 pool for a juicy passive income, which is fantastic. The last epoch, we came in at 11.12% APY, which is amazing. So, yeah, jump in the pool.
Fantastic. Right, let's jump on down and get right on into this technical analysis.
Let's do it.
Okay guys, we're going to start with just getting an understanding as to what is going on generally for the crypto space. We obviously have a fear and greed index here. This is indicating that we've actually started to move up from the fear yesterday of 28 up to a fear of 38 today. So again, we're starting to move up towards that greed area and is vastly different to the extreme fear that we've been experiencing the last couple of weeks. So again, generally speaking, with Bitcoin moving the way that it has done, breaching that 40k level and sustaining it for a period of time, and basically the confidence is coming back into the crypto space here. And again, it's important to obviously reference Bitcoin's dominance. We still have that expectation that Bitcoin dominance will actually increase towards the 50% level. Despite all of the API issues yesterday, it is still ultimately going to be moving up here in my opinion, and this will basically allow us to kind of mimic what is happening back in the previous bull run here of 2017, where we dropped down to 37 before going up towards the 50% area. This year we've actually dropped down to 39%, and my expectations are that we will actually bring this Bitcoin dominance back up to 50% and maybe even up to 60% before we go parabolic, bringing Bitcoin's dominance back down towards the 30% level. So again, good to know where we are in the cycle right now. I think we've got about 43% so far. I know you'll see this is a bit off because it's CoinMarketCap's API issue, but right now, yeah, I think we're about 43 or so percent from a Bitcoin dominance perspective. So it's always good to understand where we are in the entire system here. We obviously have generalized fear actually increasing now, and we have Bitcoin dominance steadily increasing as well. Now what we're going to do is jump into 𝗖𝗢𝗠𝗠𝗘𝗥𝗦 dashboard here. We obviously have access to 6 power factors, and this is for 𝗲𝗓𝗏, and we can obviously see that there is still a liquidity issue for 𝗲𝗓𝗏, and I think this is places like Binance, for example, where they're preventing withdrawals and things like that happening. So again, we are expecting this to resolve itself in due course, and once the liquidity issues are resolved, it will also have an impact on some of these other indicators as well. So we can see that the fear and greed index has increased to C1, which is a nice positive move in line with our expectations of what was happening with Bitcoin and the general space as well. So we can see how it had basically fallen all the way down here to the bottom during this last couple of weeks, indicating it was extremely fearful, and actually we're starting to see an increase now. So again, I think we're in a pretty good position so far with 𝗲𝗓𝗏. Still has a lot of ground to cover in order to get good solid an increase in kind of price discovery and things like that. I think ultimately we have issues with liquidity. The fear is still there. It does need to improve a little bit more, and these are having an impact on our Sharpe ratio as well. So when we take a look at Sharpe ratio and the risk to rewards, we are closing the gap a little bit now. So we are going to start to see this thing potentially start to increase and actually be, a slightly better Sharpe ratio than we are currently seeing. So again, once that liquidity issue gets resolved and that fear kind of dissipates from the sentiment of the market, I think we're going to start seeing a pretty good increase with the Sharpe ratio as well. Now, in terms of profitability, it's still an A1, very, very profitable coin to be in, and it is performing very, very well at the moment. So again, We have obviously pulled down a little bit, but the expectations are that we'll still sustain an A1 rating during the rest of this bull run. Now, as we come down, we can also see a B2 rating for the peak end value as well, and a moving average is down at D. So again, those moving averages have been heavily affected during the last few weeks, and why wouldn't they be, right? Ultimately, we've had a huge kind of correction in this space down here. And again, those moving averages would have been affected. So again, these kind of been a knock-on effect to that generalized sentiment in the market, with everyone a bit fearful, loads of FUD out there saying that we're going into a bear market and Bitcoin was going to go down to 20K, and loads of shorting was going on, and obviously loads of shorters got wrecked trying to play the game that is Bitcoin, right? And as a result of that, lots of these other particular projects have also been susceptible to that noise in the space, and also believing that you're going into a bear market and everything is going to go crashing back down to pre-pump levels. And as a result of this, you're seeing this actually reflected in this artificial intelligence driven data here, right? And data doesn't generally lie, specifically when it's being driven from artificial intelligence rather than from humans. Humans will manipulate things to suit their own narratives, but when it comes to AI and those algorithms, the data will not lie. So right here, we obviously can see there are issues with liquidity. We can see that there is still fear in the space. We can see that the Sharpe ratio has been affected, and also those moving averages as well. But also from a profitability point of view, this is still a fantastic opportunity. So what we can now do is actually jump into our chart here for Harmony 1 to the USDT. We're starting off on that weekly chart, guys. So this gives us that big overview of where things are going, and it's always important to zoom out if ever you're in doubt, right? So ultimately what you end up with here is seeing what's been going on with Harmony 1, and these kind of moves that we've been seeing are very much in line with our expectations. Okay, so obviously we have this March crash of 2020. This is triggering the bull run effectively, okay? And I know people at the time probably didn't even notice it, but we had actually increase up to this area just here, which was the August run, which was a fantastic high for many, many projects. We had the pullback. This actually brought us in down to this level here, which was towards the end of December. Now, this was the correction wave of 2, okay? And correction wave 2 is usually 50 to 60% of the move from 0 to 1, okay? So a pretty steep kind of correction, but nonetheless, it was a flat correction, right? It took a significant amount of time to actually correct down to this level. Once we got into January of 2021, that's where we started wave 3, and we can see this thing peaked up here in March of 2020 or 2021. Okay, and obviously this was a fantastic run. It's quite a decent size run here for Harmony. Now we've had the correction wave 4 that took a lot of people by surprise. And this particular correction was sharp, and it's sharp because wave 2 was flat. Okay, so again, what you end up with is a nice quick I guess correction to the downside that was going to be coming. You can't go up forever, right? So you're going to have a correction at some point. You have this sharp correction come down to the downside here, mainly driven from Bitcoin and that kind of FUD that was put out there and that fear in the general space. And ultimately what this has done is it's allowed us to get some pretty good ground. Now this is about the stereotypical 40% move that you would normally see when you basically have a wave 3 here. So basically your 40% of wave 3 is your correction for wave 4, and typically speaking. So here we can expect this to kind of be the bottom, but we have the possibility to actually find our upward trend line here and find this as a support line. We didn't actually come down any lower, so that was a good thing. And obviously we started to see this thing potentially get some kind of corrective recovery going on now. So what we're going to do is pull this down. Now we have an understanding as to where things are going. Obviously we have our wave 5, which is obviously significantly higher than wave 3, right? So this is where we're going. With that being said, let's jump down into our daily chart here. Here we obviously have the Fibonacci retracement tool added on. Okay, and this runs from that high level here, that was the peak of wave 3, down to the low of the bottom here of wave 4. And obviously we can see what's been going on most recently. Now, obviously we have a couple of lower lows being set on these lower time stamps, but also we have some higher lows being set here, also just from a little bit of a different time period. So it's going to be an interesting one to see if we are likely to fall back down. We obviously have trend lines forming all over the place. So as we get into the detail of going into these shorter time stamps, you'll see lots of different trend lines, lots of different pieces of analysis, lots of different waves. It's always important to understand that whatever time period that you're looking at, be that the weekly, the daily, the hourly, the 15-minute chart, they're all going to be relative to that time. Okay, so as fast as these trends appear is how fast they could also disappear. So it's important that we do make sure that we are fully aware of the time periods that we are doing analysis on. So that's why we start at that week view. We can see what's going on for the bigger picture, and then we get into this daily view. We can see some of the more kind of trend lines that are forming here for just our daily view, right? So straight away we can go ahead and see there's an upward trend there. And there's obviously a downward trend over here that was invalidated 2 days ago. Okay, we can see that, and we see have the back test coming back down, etc. Right, so we know that there are some trends here that are worth potentially pointing out. Now we do have this yellow box. This yellow box area here is our 618, 702, 786 area, and this particular yellow box is the area that we want to push all the way through. And getting the closed candle above this area here, specifically a weekly closed candle, it put us in a very strong position to continue that motion to the upside. Now, guys, this is driven from, not from this point, but from this point here, I think. Yep, this is the one. So we just pop that there. Right, so from this high peak here, just after our recent crash, we actually had the correction come down a little bit lower, right? So we fell down. This is correction 1. We pumped back up, and then we fell down lower, okay? So this particular point, high point here, is the one that we're using for this Fibonacci. We pull down, and we can see that we're retraced back up towards the 786 line. We failed on 5 attempts to actually push through this yellow box here, and we fell down since. So again, guys, it's important that we obviously monitor what happens here within this yellow box, because this is a key area of resistance that we want to be pushing on through. And again, this also lines up to our 382 on the bigger Fibonacci, okay? So depending on what time period you look at, you can obviously put these Fibonacci retracement tools on many different areas, and you can set these different targets, right? Right now for us, this target here, this yellow box, is the key area, with the resistance really coming in at 12.1 cent that we want to be pushing on through. Getting the closed candle above this area of about 12.6 is going to be vital, and it is going to be the thing that indicates that we're moving significantly higher during wave 5. With that being said, wave 5 is likely to be a very, very long wave. It's going to take time, and it's going to be very tedious to watch some price discovery come and go. It'll be going both ways, and during this 5th wave to the upside. That parabolic moment will only come towards the end, where you start seeing some significant rising in prices. Okay, so it's going to be very frustrating for many. This is not a get-rich-quick scheme. It's about understanding where things are going and what is likely to happen in both the short term and the long term, right? We have an understanding that things do not go up continuously. You do have waves to the upside and the downside during a big wave like wave 5 on the bigger timescales. So you have to be appreciative of what is due, what is likely to come, and try to have that vision of where things are going, right, in the bigger picture. And and endure the best you can some of these kind of corrections during these lower time periods. Right now, if I drill down this into our hourly view, here we can see what's going on right now, right, between a few of our key areas here. We do have a support of 7.9, and our resistance is 9.1. And so again, this is the area that we're going to be looking to move on through. And again, we are still expecting a bit of a pullback from how high this relative strength index is at the moment. So again, we'll expect to find support down at this lower area here at some point during the course of today, before potentially rising a little bit higher to go and test that 9.1 cent area. Right now, as we said earlier, looking at that artificial intelligence from 𝗖𝗢, we can tell that the sentiment in the market is still quite fearful, which means that ultimately every time we've been pushing the price up, we have actually started to see volumes decrease rather than increase, okay? With a couple of exceptions where you get some larger pockets of buying volume. Other than that, you actually find that the selling pressure increases rather than decreases, and your purchasing pressure decreases rather than increases, right? So again, that sentiment is in the middle of changing. So you'll start seeing this flatten out before you actually start to move things in the right direction. And I think ultimately what you end up with is a bit of a downward trend for a second to find support. Once you find support, you'll probably move to the upside. And I think you're going to find that actually we're going to trade sideways between these areas for a little while, until that sentiment works itself out, and until people are more confident to come back into the space purchasing up something like Harmony 1. And again, if you're a short-term trader, you can take advantage of obviously that relative strength index. You can take advantage of the Bollinger Bands. We can put those on here. You can see how we're going to get a tight squeeze here. You can obviously take advantage of many of these other things, such as the moving averages, looking for any crosses and things like that that might be also quite scary for many. And again, if you're on EMA, you can obviously use that as well. So there are lots of things that you can take advantage of here, looking at key levels of support, looking at key areas of resistance, looking at the register strength index, looking at how the volume and the sentiments are working, checking out the EVI dashboard, getting an understanding as to what the issues are. There's issues with liquidity, there's issues with fear and greed index. And there obviously is a risk to the rewards. Coupling all this stuff together and understanding where you're going in both the short term and the long term could put you at a competitive edge against some others in this space. If you're in the know, you'll be able to make some effective short-term trades and maybe even increase your position. And again, this isn't something that me and Chris do. We are not short-term traders. We are long-term investors. We have an investment mindset. And that means that ultimately what we tend to do is basically buy and hodl. We buy the dips when we know the bigger macro picture is to basically be moving to the upside, right? So if we take a look at that weekly view, okay, when we know that the actual macro picture here is to move up towards wave 5, then all we end up doing is buying these dips coming down and basically dollar cost averaging our position for what was to come during wave 5. And again, the expectations, guys, are not to sell the top, not from our point of view. There's many different ways and different approaches to exiting a cryptocurrency. Just do check out the member section on YouTube. We do talk about exit strategies, exit points, price levels, and things like that, where our expectations are with many of these particular cryptocurrencies. So do check out those videos that we will be posting on the member section, and we'll talk about how not to necessarily sell the top, but how to get as close to the top as humanly possible. Chris, that's kind of everything I have from a technical point of view on Harmony One today. Is there anything else that you feel you want to add?
No, I don't think there's anything that's left to add, Nick, to be honest. Just appreciate everybody taking the time to watch today's video. Yeah, it's all good.
Fantastic, guys. If you found it useful, informative, do go ahead and hit that like button. We both really do appreciate it. And of course, if you happen to be new to the channel and you'd like to stay up to date with the new cryptocurrencies, the hidden gems, the technical analysis and news, then do go ahead and subscribe. By subscribing, you will be kept up to date with absolutely everything we do here. If you hit the bell, tap on all, you won't miss a single video. With that said, done and out of the way, guys, we hope you have a fantastic day, and we'll catch you all in the next one.
Yeah, take care.